Happy to you. Happy to you. Happy birthday, dear. Happy birthday to you.
Anyway, this is my birthday. But it's our day to answer your questions about year-end tax planning. We've gotten a lot of questions, so we will do that. If you do have a question, shoot us an email, asktheexperts@moneywatch.com, asktheexperts@moneywatch.com, or hop onto the website, moneywatch.com, and you can go into our live chat, which is very alive and full of chat. All right, now, we've got a potential deal here between President Obama and some Republicans. The Democrats, the left-leaning Democrats, not happy. Eric, are they just going to swallow it eventually and this is going to go through? What's going to happen?
Yeah, I don't think that the Democrats can muster opposition to their own president. That doesn't work on so many different levels. Plus, it'll probably be futile because in January, the Republicans come over and they have a majority. So why fight? Why fight a fight you're going to lose in 2 months? But, you know, there are a lot of questions about this. Like, why were we so worried about the deficits last week, and now all of a sudden we're giving tax cuts on Social Security and spending more money and estate
you and
taxes.
Those details. Gosh. I mean, well, you know, there's clearly no one cares about the deficit. Let's be honest.
Until the next time they do.
Right. And Jack, is there any part of the potential plan, and we can't call it a plan yet, but is there a part of it that you like or dislike specifically that is, you know, kind of getting your blood boiling?
Well, I think it's hilarious that what they call a compromise means you get to spend all that you want to, and I get to spend all that I want to.
Isn't that
That's
great?
That's the compromise, yeah.
It's
and we'll
so
charge
good.
people later. So I think in the short term, I hate to admit that it's true that probably raising taxes and cutting spending probably isn't the best idea.
That's what Bernanke said on 60 Minutes last weekend,
Well,
right?
Ben and I are kind of a feather facial hair difference, but the problem is that we're never going to be able to shut off the spigot.
Right.
You know, so it's just getting more and more painful eventually.
Right. And so, Eric, what do you think is the likely scenario? 2 years is what the extension is of these tax brackets, and 1 year for the payroll holiday tax. But, you know, now I thought it was weird that it was a 2-year deal. I thought it would either have been 1 year or 3 years because I thought that maybe the president didn't want to run for re-election right at that moment, but obviously he did. So what's that about? And do we think that gets extended, or will there something really happen in 2012?
I have to sort of go with the political momentum of tax cuts. They're very hard to reverse, and that was what the Republicans were crowing about the Bush tax cuts that we just decided to extend.
Right.
That it's just very hard to claw them back after you've made the cut. I think, however, I mean, we all here can do the arithmetic. Something has to change, but it might not happen in the next 2 years. But it will happen eventually, and it'll be some disaster that causes everyone to go, oh, no, wait a minute. This really is unsustainable, and now we have to do something about it.
What do you rather do? Would you rather proactively be doing something about it, or would you like to be like Ireland and have it done to you? I mean, basically that the bond market forces your hand and you have to do something. That's what's so scary about it, is that like we actually have the time right now to do something proactively. And yet we're going to back ourselves in a corner again because these knuckleheads.
Here's the most optimistic scenario.
Here we go.
So,
Pollyanna right here.
Pollyanna. So 2 years, the economy does improve a little bit, thanks in part to this $900 billion stimulus. And as a result, the Democrats are reelected. But in the meantime, in the next 2 years, the Republicans are going to continue to scream about what a problem this deficit is. But it won't be quite enough. The Democrats are reelected. And in that first year, when, first of all, Obama can't get reelected, and he's got 3 more years till whoever succeeds him will be running for office, maybe then they can stand tough and actually allow at least the Bush tax cuts for the wealthiest to expire, and it will be one tiny step in the direction of fiscal responsibility.
Yes, yes. Well, that's a good optimistic scenario.
Now, Eric, please give us the worst case scenario.
Oh, yes, right. On cue. All right, the worst case scenario is not that Obama and the Democrats seize an opportunity that's handed to them in 2012 or 2013. Instead, a state fiscal crisis. California goes under and dragging Illinois behind it, kicking and screaming, and And New Jersey has to stop paying its firemen and police, and everyone goes to the federal government and they go, we have a country here that doesn't work, and we need to come up with the money, and we have to behave in a way that is responsible enough that someone, like the Chinese or other people, will lend it to us. And then our hand is really forced, and we do have a kind of Irish, Greek, Spanish, Portuguese type experience, which won't be pleasant.
No, it will not be. However, it's my birthday, and I don't want to think about such a downer thing. But what is interesting is that because there is not necessarily, whether this happens, let's just be clear that even if they don't pass this in the lame duck, there is an opportunity that in January when the new Congress comes in, that they will pass this, and it'll be retroactive, and no one, I mean, I guess the payroll companies will go nuts about this. I mean, just think about that, like your ADP, and it's like, what do we do? How do we prepare? What are we going to, so that'll go down to the wire. But it does sort of change your tax planning. We go back to maybe more traditional year-end tax planning, and we'll be having a very exciting article about that here on MoneyWatch.com.
Who's going to write it, Jill?
I just, you know what? I took someone else's article and I updated it. Let's be honest. Come on. Jack just said, go look at this and update it, which I did. They do what they tell me. But there are things that people should be looking to do, and it's nice that it's the end of the year, because the calendar does kind of nudge you a little bit to do some stuff. So right now, we're going to ask you to stop thinking about the holidays, and the kindness of mankind and all that, and think about your money. Okay, your taxes. So let's go. We got some questions here. Here's Peggy from Wisconsin. My parents have been retired for 25 years. They sold a substantial amount of property in June 2010. They have not filed taxes in several years. Do they need to file now? Who knows the answer to that?
Yes.
Yes. Let me play this safe.
CPA?
Yes. Let me consult my tax guide. Yes.
Yes, they do. And they might want to look for good bail bondsmen as well.
Why? I mean, not filing taxes in several years is quite interesting, but maybe they are, let's assume that was all fine. But anyway, assuming that they made some money on that property, they do have to file their taxes, right, Eric?
Yes.
That's it. Capital gains, all that.
And I suspect they'll be filing some back taxes.
They may.
Yes, they ought to do that right away.
How do they protect the sale of the property from taxes? The answer is just pay your taxes, for God's sakes. Okay, let me do Paul. Paul from Indianapolis says, due to being downsized this year, my withholding and FICA taxes stopped in March 2010. I since started doing consulting work on a 1099 basis for a couple of companies. What should I be doing to minimize income and self-employment taxes? Well, first of all, the guy's amazing. He already started a single or a uni or an individual 401k, and he continued his health savings account. Jack, what do you think of that 401k? You know all about that one? Just basically get to put away piles of money.
I think it's, as you said, it's incredible. It's good for him for doing that. Unfortunately, with self-employment taxes, there's not a whole heck of a lot you can do. I mean, the one thing is when his accountant is doing this year's taxes, if there's a deduction that might have been pre-March for that job, but maybe you could put it against your new self-employment income a little bit. That would be nice.
Maybe the computer that he upgraded, and maybe if there's some equipment and money that he spent that he could take as deductions against his self-employment income. Why not?
And we should explain that the self-employment income is more painful from a tax perspective than his salary, because you have to pay, essentially, you're being the employer as well as the employee.
Right. You each are paying both the 6.2% as employer and employee. So isn't that 12.4?
So your Social Security taxes go up, essentially.
Right.
Yes, that's right. But this tax is levied against your net income from this self-employment job. So in those three letters, NET, there's a lot to net against your income. All the expenses we talked about, equipment, the computer that you need, the internet connection and so forth that you need to conduct your business, all that is deductible. And that is really the blank slate, the honeypot of the tax code is when you're self-employed.
Right, and you just have to be careful and maybe consult with an accountant when you're doing home office deductions. Big red flag for an IRS audit, right?
Yes, right?
So don't be a pig about that. But, I think that's a very, people who are self-employed, they sometimes get a little crazy about that other 6.2%, and you can't really avoid it, but you are your own boss, and there's a lot of stuff you can deduct. So I think that's pretty darn good. Here's Ellen from Illinois. I love all these Midwestern people because we're so, thank God for Eric, who really exemplifies Midwestern values while Jack and I are stuck here on the East Coast. Okay. Ellen from Illinois writes, we have an accountant who does our taxes every year. My husband lost his job in April and they got unemployment. Anyway, when they filed their tax return, they own $2,900 and they don't have the money to pay it. So she wants to know that she's very concerned. How are they going to pay this? And she doesn't want her wages garnished. So do you have ideas about what to do about this, Jack?
Well, first of all, and this is, here I am going to be real Debbie Downer, take your medicine, eat your vegetables guy. But the IRS is one of those expenses that you want to put at the top of the priority list. So when she says we don't have that money, I think you really have to look and consider making painful cuts in your lifestyle in order to pay the IRS.
Yeah.
Because you're going to pay the IRS. It's either pay them now or pay them more later. And in the meantime, they might make your life miserable.
Yeah.
So literally, if you have 2 cars, can you sell one? I mean, it's time to bite into flesh in order to pay the IRS. There are things you can do. You can set up a plan where you pay them over time. It's called a streamlined installment plan. So there are options there. But
They hook you though on to do that. I mean, I think it's 12% extra that you have to pay.
It's like paying off a credit card.
Exactly. So, and maybe look, we don't know really enough about their situation, but anything else that we could suggest here?
Right. No, I
don't think
agree
so.
with Jack. Don't fool around with it. Borrow it from your family. Do whatever you can. Just
Right.
get this one behind
Yeah.
you.
And even if you had to do like a home equity loan or, get a 0% credit card, it might actually be better to borrow on credit card than
Yes.
owe Uncle Sam money.
Yes.
Manson has this question. I recently received a stock gift from my employer. A gift from my employer. Grant, I think we mean. I took ownership of the stock in 2010. I can't exercise the stock until 2012. I'll be taxed on the gain in 2010, but I don't have access to the cash until 12. How can I lower my tax bill? Now, here's the thing. This person is single, owns, I don't know if this is a man or woman. I'm going to say him. I own my own home. He itemized deductions, 7% in the 401k, doesn't have a Roth IRA, 70 grand, adjusted gross income of 50 grand, receives a refund of 2,000. All things currently stand with his stock gift. Tax my bill could be around, he says a tax bill could be $12,000 to $4,000. That's a heck of a lot of stock to receive then. Usually you're usually not taxed on the grant unless there's some economic value to you. And so often I'm surprised that there is some hit to him today if he can't exercise till 12.
That's right. I don't understand the situation either. The words that the IRS uses, constructive receipt. And if you can't spend the money, you are not in constructive receipt. And so, except in very special circumstances. I would the first thing I would do is go look at the stock grant
Right.
offering document and make sure that you understand this right, or go to an accountant.
Yeah.
It doesn't sound right.
Doesn't and assuming that you got, I mean, unless if it maybe it's probably isn't an option because he's using the word stock. So I think in most cases that unless you have the ability to sell it and you didn't and you have not sold it, there's no I don't see where the tax is here.
What was the mistake that a lot of guys made in the dot-com boom? Did they take bonuses in stock, pay the taxes, and then leave them in stock?
What a lot of them did in the dot-com boom, because I had so many of these clients, it was hysterical because I was in New England and they all worked at EMC and they worked in these places outside of 128. And what they would do is they'd have options that were granted and that they would exercise their options. And they'd wait and they say, we're not going to sell the stock because then it would be ordinary income. It won't be capital gains. I'm going to wait a year and then it'll be long-term capital gains. And in that year, everything fell apart. Right. So they got taxed on the initial grant of options and the exercise of the options, and there was economic value there, and they could have just sold it right then and there, right? So a lot of them had 20, 30, 40, 50 bucks that was embedded in the option grant, and they didn't. And then they waited, and then they went underwater.
It's possible what this guy means when he says I can't sell, he means I can't sell and pay the 15% tax that I'd like to pay instead of the 28 or whatever.
Yeah, I don't know. Mm-hmm. Maybe. Look, if you can pay it if you sell your stock.
Well, that's the thing. What I don't want him to do is pay the taxes, and then have all the value that he just paid taxes on disappear
Right.
because something goes wrong with the stock.
Right. So you know what I'm going to say? We're not CPAs, but maybe you should go talk to an accountant. This is not a bad time to do it either because, they're not crazy yet. And let's see what you got. And by the way, don't be putting money in a Roth IRA if you're only putting 7% in your 401k. How about maxing out your 401k first?
Well,
I'm telling you.
I don't know.
He's going to do it. Well, let's see how much he's going to. I mean, he's making 70 grand. Maybe he'll make more. So you want him to do the Roth.
Yeah. And he could be young, so a lot of compounding there.
Single and owns his own home.
Yep.
Maybe.
Yep.
Could be.
And who knows? Maybe the 401k plan has lousy investment options.
How bad could they be? All right, here comes Marge. Marge asks, with a small sole proprietor, LLC, is it better to have a separate tax ID to file taxes or just use your social security number and file with your personal taxes? Depends what kind of LLC is my idea here. I mean, if you're a sole proprietor, you can usually just use your social security number. Don't get involved. But if you are in the kind of business where you're going to get sued and you want to have limited liability and truly have limited liability, the liability company does that. You don't actually have to have a separate tax ID to do that. So usually, if you have an LLC, just use your own tax number. My 2 cents.
I learned something today.
Oh,
And
well.
someone can slip on the ice. I mean, it could be something where you wouldn't think you'd have liability, right? But someone could slip on the ice, fall, hit their head, you own the building, you're in trouble.
Yeah, I mean, I think that for most people, for a sole proprietor,
Yeah.
just keep it simple. And it's okay to have a limited liability, but you will have limited liability. That's the legal structure. Here's a woman from California who has a very complicated situation. You ready? Stand by. Her basic question is, what can she do to cut her taxes, like everybody else? The background is she and her husband are in a 42% tax bracket. I don't know what that means. There is
State
no
and local plus federal.
Right, exactly.
Yes,
but there
right.
is no 42% tax bracket. So it's probably because you live in California. Should have moved to Washington State. CPA informed me that we don't really qualify for any tax breaks since we earn too much. Our combined income will be $250,000 and we don't have children. We have rental property, told we don't get a tax break and told to sell it since we won't recover any equity based on what we paid for it. Yeesh. My husband is earned W-2 income. She's self-employed. They don't buy very many assets, or they don't have a lot of stuff for the business. She teaches at a local university. CPA said she can't contribute to an IRA since the school made me enter their retirement plan. He told me to stop teaching since I lost my $10,000 IRA contribution opportunity. I'm going to contribute $10,000 in my 401k, save $4,000. I still owe $25,000 in taxes minus quarterly payments I've already made. Is there anything different I should be doing? She works hard. She takes a lot of risk. This is the person who says, you know what, Obama? I don't feel rich. I make 250 grand, but I don't feel rich. Eric, do you have anything here that we want to go through?
Well, she's already paid quarterly taxes, so there's not. It sounds like she's just underestimated what she owes. So do all those year-end tax moves. One of the free ones. It sounds like she has a lot of money invested, probably on the outside. So take some tax losses and write them off. There's probably, if your losses exceed your realized gains, that's $3,000 right there, and it costs you nothing. And with the right switch, it doesn't even cost you risk. Mm-hmm. So that's one.
I'm looking at this, and she says her schools made her enter their retirement plan, and they contributed $250, but maybe I don't know how much money she makes on her own income, but she could actually put money in there based on her income. So that's another place. Mm-hmm. I mean, hopefully her husband's probably maxing out his retirement account. She says, I'm going to contribute $10,000 to my 401k. $10,000? Why not $16,500? Where's the rest of that money?
Yeah, I was confused by that too. And she says she's self-employed.
And if she's self-employed and she's making boatloads of money, go back to the other guy who had the solo 401k, because you can put over $45,000 in that. If you really got a little extra cash flow, that's where you sock it away. As a sole proprietor, that's a brilliant way to do it. But she's a self-employed partner, so it means that both of them have to do it. But those are good.
Right. Yeah. She would have to make a big, good share of the income in the family to be able to sock away that much money.
Right, but it could be
Single
more,
401k.
right? But at least get to 16.5.
Right. Just
right?
get to 60. Yeah. I don't know if she teaches and has a retirement plan, presumably a 403B at the
Right,
school.
right.
But she also has a 401k. Well, maybe for her self-employment income.
Yeah,
It's
that's
hard to
what we're
figure it
thinking.
out.
But anyway,
yeah.
we want you to kind of squeeze it any possible way. I love the idea of harvesting losers, one of my favorite year-end tax tricks. Especially, I love it when you do it before, well, we're probably past the point, mutual fund distribution time. It's always fun. Oh, let me sell that loaded mutual fund and replace it with an index fund that doesn't get a distribution. Eric, what is your absolute favorite year-end planning move that people can make between now and the end of the year? What should people do?
Well, I just blurted it out there on the tax loss harvesting. It really does seem like free money, and you get to move around. And I love making investment decisions where you can't be wrong.
Well, you're never wrong. We
Well,
always keep
there's-
saying that.
And I think people don't understand that because they hear us say, don't trade too often, buy and hold. And it sounds as if we're contradicting ourselves when we say do this. And we're really not. If nothing else, I mean, there's this wash sale rule, so you can't sell it and then buy it back. But the fact is, this thing is littered with holes. And you can buy, and even though the language is substantially similar, you can sell a growth fund.
Buy an index.
And then buy an index that buys growth stocks.
Yeah.
And that's actually not substantially similar. You're fine.
Yeah. Right.
So there's a lot of things. And buy it the same day. So you're not changing your risk profile at all. All you're doing is thanking Uncle Sam for a $3,000 gift.
And you know what's neat is that if listen, the market's already up, let's say 10% this year. There may be some stuff that you've made money on throughout the year. So maybe you can take some gains against some losses against gains, and then, as you said, the extra 3,000 can be used against ordinary income. And if you got a big fat loser, don't worry, you can push it forward. You can move that into next year, and you can use that loss next year. I like the idea of that selling losers is a great discipline anyway. So it really is, because sometimes people are hanging on to things and they're like, but just wait till
Till I break even. That's the great one.
Yes, right.
I was at
Get
break
back
even.
to even,
Get
yeah.
back to even. Really? Who says you're getting back to even?
And also, it's a really bad idea.
Yeah.
Because you've sat on that money all that time and basically given away the tax loss.
And, I think that some other things that people should be thinking about, obviously, is making charitable contributions. So if your Nana gave you shares of Anheuser-Busch a million years ago and you never wanted to sell because you didn't want to pay the taxes, you can gift some of those highly appreciated securities to a charity. They're happy to take it. They don't have to take the taxes. So it's good. So I like that kind of, gifting towards the end of the year.
And this is when they pay their $25,000, it's not going to help them that much, but it'll help a tiny bit psychologically. Ask their accountant to tell them what their actual taxes were on the money they made. And
Yeah.
I promise them it's not 42%. It's not 40%. It's
Right.
not 38%. It'll be somewhere 22, 24, worst case scenario, a little higher than 24.
Right. And people don't get that because the system is progressive, right?
Right.
And so they just figure, well, that last dollar that I was taxed on is what I'm going to do, and then I'll pile on that state tax. And then, of course, consider leaving California would be our next. What about you, Jack? What do you like to do at the end of the year besides tax selling, giving away some stuff? You like to party like an animal, but other things you like to do?
Well, we clean out the closet.
Oh, very nice. How about a little financial planning tip for the end of the year? Do you think that the end of the year can, get people to do stuff that they just haven't done? For example, I don't know, like a will, a guardianship instruction. I mean, is there any nudge factor to that?
That would be a good idea if you have children, maybe.
Yes, if you had two beautiful children,
Yeah.
one of whom reads the Wall Street Journal on a day-to-day basis.
Yeah.
I think that it is. I really like the idea of the calendar nudging you. And I think that if you can do that, that's great. I think it's also a good time to sort of say, let me gather all my documents. I'm not going to do it during the holidays. I'm not going to do that. But you know what? I'll do it now. I'll get everything together, and tax time's going to be around the corner. And then in January, if I work with a financial planner or an advisor or a broker, whoever, I have all my stuff together. Book your appointment for January. Get in there. Talk to, just get yourself together.
I think that's a great idea. And all of us are looking for excuses to get away from the in-laws around the holidays.
Yeah,
And
it's awesome.
I'm sorry I have to go up and rebalance my portfolio.
You know what? I'm sorry that you said that on tape. for you. Not my in-laws. My mother-in-law called me this morning and sang to me.
Here's another idea. Everyone's getting a 2% raise next year.
Yeah.
Did you know that?
Yeah.
First, they hear it first from MoneyWatch.
That's it. Woohoo!
So go in now to your 401k.
I love this idea.
And set it to, I would say 2 more percentage points.
Oh my God, you're Scrooge. Can't I have any of that money?
But just do 1 percentage
All
point.
right. I
Your
can live with
paycheck's
that.
going to go up a little bit, and
See,
you're going to save a
Congress,
little
how
bit.
easy it is? We just negotiated. So what Jack's talking about is that again, if this deal goes through and the tax changes, you're going to see your portion of FICA taxes. Remember that line item says FICA is your payment into Social Security, 6.2%. It's going to be 4.2%. If you make 50 grand, it's an extra $1,000 in your pocket. However, Jack is suggesting you take half of that and put it into your 401k.
Which is a very unpatriotic suggestion.
Because you're not spending it and
Yeah.
you're not boosting our economy.
Yeah, sorry about that.
What do you think that the boost to the economy is going to be as a result of this potential tax plan? Give me your guesstimate.
I did see a progressive economist think tank estimating 3 million jobs created.
Yeah, there's
which
no way that's
sounds
happening.
really optimistic
What
to
do
me.
you
Yes,
think?
I saw a point in GDP. It sounds really optimistic because it can be totally overturned by the bond market vigilantes who say, wait a minute, we just added $900 billion to the deficit. These dollars that the Treasury is going to pay me back in will be worth less. I need a higher interest rate, and that higher interest rate could slow the economy. This could backfire.
You know what? Eric is being a little bit Scrooge today. I just want to say. Now, let's talk about that for 1 second, because before we go, with all the tax stuff, everybody was looking to refinance, right? And everyone was getting greedy. I blogged about this morning, even though I know that we're covering it like crazy, because I was talking to a friend of mine who's a mortgage broker, and he says, you are not going to believe the people who are calling me out of the woodwork who've been sitting, waiting, and now they're freaking out because we just had, a couple rotten days in the bond market. And really, bond yields have been drifting higher since before this tax plan came through. But we saw rates on mortgages jump about 0.75% over the last 5 or 6 weeks. Eric, should those people wait for it to go back down?
Let me quote my favorite editor at large. When asked this question on a previous Ask the Experts about whether they should wait for refinance rates to go down, she said, "What are you waiting for, you moron?"
So
that's yes.
That's kind
That's
of the
it.
problem.
That's
It's terrible. Like, I don't know why everyone thinks they have to buy the bottom of the rate cycle.
Well, it feels good if you can, but you can use another one of your favorite quotes right now.
Yeah, which one? I have
About
so many.
bulls?
Yeah, I did write about that today. I said bulls and bears make money and pigs are getting slaughtered. I heard some pigs squealing. I was over in the broadcast center yesterday, and one of my favorite pigs there came over to me and said, "Oh my God, I should have refinanced when you told me. I am screwed now." And this particular little piggy said, I said, "Well, what's your current interest rate?" You're going to like this. 6%.
I knew you were going to say that. Yeah.
6%. I said, well, so just do it now. Well, I can't do it now. I said, well, it still works. It still makes sense. So if you run the numbers and it still makes sense for you, go ahead and do it. If it doesn't make sense now, then, you learned a painful lesson. You pull the trigger. You don't wait around for a quarter point or an eighth.
And by the way, you can share that painful lesson with your grandchildren because they'll be the next ones to see 4 3/4
Nice.
interest
There you
payments
go. There you go.
on
and
mortgages.
you know
I
what?
hope.
And I know
Yes.
it's human nature, guys. I get it. Like, I refinanced after like a year and a half. I thought I just caught it. I was psyched. I'm like, 4 1/4, 30-year fix. And then it dipped by an eighth. I'm like, damn it. And I know the feeling, but you just have to pull the trigger sometimes and do it. If it makes sense for you, run the numbers, do it. Right? We're good. Megan, do you have anything else for us today? Except that Elise told us, by the way, Elise told us that she said that we all look very cute and she wanted to say hi. We love you, Elise.
Oh, hi, Elise.
Happy late Hanukkah to her. Anything else? Megan is shaking her head no. It's, by the way, 9,000 degrees in the studio, and Megan could be going into labor shortly. I just want to point that out. When you go into labor, I hope it happens in here. It would be so exciting. Great for us. We'll get a lot of streams, right?
Yes, that's right. Roll and turn the cameras around.
Producer goes into labor during podcasts.
My brother's an EMT. He sometimes is on with us, so he could give us instructions.
Oh, that would be
But yeah.
so good.
Hot water,
I
yeah.
know.
Get the hot
She's
water.
turning bright red now. Anyway, we will be back next week. We are going to have the MoneyWatch editor gift guide. Eric, be prepared. This is not going to make you a happy camper. And I know you love to be the adult, but it's going to be fun. I promise.
Bah, humbug.
Yeah, he's still in the Scrooge mood. It's not going to be good.
We will have fun, I promise you.
He's going to say Roth IRA and stuff like that.
Yes, what should I give?
Right.
What are you going to give my daughter for Christmas? Well, she really wanted an Xbox. She wanted to connect. She wanted this. She wanted an iPad. But instead, I got her a Roth IRA. You don't do that. Anyway, if you've got questions for next week, if you've got gift buying questions, we are going to have a little gift show next week. It's very exciting. I can't talk about my grand jury, but I will be here, I promise. So if you have a question, ask the experts at MoneyWatch.com. Ask the experts at MoneyWatch.com. Tune in next week and we will be here. I am Jill Schlesinger.
Eric Schoenberg.
Jack Otter.
And we will see you next week.
Happy birthday. Happy birthday.